Good morning and welcome along to another episode of Beyond Bitcoin. My name is Deryck Graham. You will know that each month now we do crypto commentary on the market space. We do discussions on macroeconomics, the impact of that market. We interview entrepreneurs, authors and experts. And we do this, of course, with my friend Nitin Gaur alongside me. Now, before we jump across to that, don't forget to subscribe and like this page and share it with your like-minded friends that you feel need to know more about crypto than they might currently do. I'm sure everyone could do with that. So for now, please welcome along our friend Nitin, and Nitin is going to introduce us to a quite extraordinary author we've got with us today. Hello, Nitin.
Yeah. Hey, Deryck. As usual, glad to be here, this time from my home base in Austin, and it was great to hang with you in Lake Dubai. As you know, we had an interesting experience in Dubai with all the rains and fiasco. And today, it's with great pleasure I'd like to welcome Annelise Osbourne, a brilliant author, even a better growth hacker, and we'll talk about that a little bit, and a good friend. Annelise, welcome to Beyond Bitcoin. So glad you're here.
So excited to be here. Thank you both so much for having me. I love your show. I really do. So I'm honored.
Thank you.
Thank you so much. The honor is all ours. And today's episode, to me, Annelise, is special as I have always admired your work from when we met. We met at Arca Labs and when I was at State Street. And we both were solving for liquidity and tokenized money market instruments. And I believe, if I'm not mistaken, back in the day, it was a fund that provides investors and enterprises access to managed portfolio consisting primarily of US Treasury securities in a tokenized format. And I would say that you were way ahead of the time of BlackRock. I'd say that. And they had advantage now of branding and the might of being the biggest asset manager, but you were way ahead of your time, Annelise. And we had some really interesting conversations how we could change the world. So, you know, it was great at the time. But when we start to discuss the industry trends, your discussion and your masterpiece in progress at the time, your book, I was intrigued with your perspectives and we really connected well. And so let's start with your journey, Annelise, and tell us about, because each one of us have a unique interface and perspective with crypto and your journey, and introduce and how you got introduced to crypto in general, and where you are now, and what is the motivation behind your recent publication, and what's your next adventure. Tell us more about that.
Wow, that's a lot to digest or a lot to disclose, I guess, at one time. But so I did traditional finance for a long time. I had done commercial real estate. I worked in Europe and in New York, and I worked at Moody's. I spent 12 years at Moody's within their structured finance group. So all sorts of debts and structures and loans. And when I left, I did a lot of board work, and I worked with different companies starting new business lines. And I was asked to join the cryptocurrency and blockchain regulatory task force by a bunch of young, energetic lawyers. And at the time, I loved the idea of digital currency and Bitcoin, but I wasn't that into blockchain and I wasn't as familiar of what it was and what it could do. But they kept calling, and so I felt like I needed to learn. I figured, sure, I would. They were very persistent. So I met with them for coffee. And to do that, I did a lot of learning actually on YouTube. So I watched loads, I read loads, and what I walked away was an understanding of this great technology and how it applies to finance. And of course, I assumed it was already being done because why me is kind of, I was busy doing other things. And so with the lawyers, they were really focused on regulation for ICOs. And so ICOs, if you think about it, were a very novel type of financing. It was the kind of post the Web 2 boom, right? Post the internet boom, where a lot of people kind of got wealthy by these startup companies. And a lot of people wanted the opportunity to actually invest in some sort of venture investing or something similar, alternative assets. And so I kind of saw it as this demand, this global demand out there wanting to participate. But it was ripe with fraud. So yes, I think it needed regulation, or in retrospect, obviously. But that was kind of how I got into the space. And then I assumed companies were already doing blockchain for finance. And my whole world is, how do we upgrade finance? I don't think finance is broken. I think it can be upgraded. If you look at all the upgrades that have come along since, remember the world of faxes, high frequency trading, everything is upgrading as opposed to saying it's wrong, let's start over. So I assumed it was being done, but at the time it was really being done by technologists or entrepreneurs. And one of the things with finance is that there's structure and regulation around it. So I think we had false starts. So I found a partner who had a broker dealer, and we worked together to create and launch digital assets. This is back in 2018 and 19, and it was a great ride. The company was called Propeller. We were merging with Fluidity, which is the parent company of AirSwap. And so we had a great run, and we'd created some digital asset securities that were all Reg Ds. Anyway, the first one was a tokenization of debt. The second one was a tokenization of mezz debt, but paid in DAI in stablecoin.
Yeah. Wow.
And then the third one was NFTs. That one never closed. But the idea was we were using NFTs for a portfolio of land. So every plot of land was an NFT. And this was before NFTs were cool. But the whole thing we were trying to pull together was structured finance on chain, because there's so many benefits, I think, that you can use, especially in fixed income, which is what we were focused on, because they're programmable securities. You can program this technology. So it can pay when it's supposed to pay. If you think about legal documents are generally Excel spreadsheets, who pays what, when, and where, and that can be codified. And so it was super exciting. The market fell apart in 2019 for us, and so we all parted ways. And then I came back. I spent a little while working on a marketplace for loans with AI and machine learning backed, an Israeli company, which was interesting. And then I came back with Arca Labs, which is, very smart group of people. Nitin had shared that we had created, and I will say it was a team. It was not my baby, but recognizing the real benefit of having tokenized, in essence, it's a pool of tokenized treasuries. And so the thought process was that instead of holding cash, you can hold this digital asset, which generates yield, right? Or if you could transfer it peer to peer. So it could be treasury management, collateral management, so many benefits, but it was difficult as a startup. There's a cost to innovation we can get into, and it's harder as a startup because we didn't have as much liquidity. Franklin Templeton came out with one as well, and they had more AUM in theirs, which leads to greater liquidity as well. So it was, I think it's a great product. It's still around, but I feel like that was a challenge. But at Arca, I got a wonderful opportunity to work with a number of really smart institutional players, like big companies that were working on creating digital asset securities. So that's always exciting to figure out how can we create these new structures. I think we use traditional structures with a new technology. I think it's too difficult to use a new structure and a new technology. It's hard for people to mentally get around that. But things, there's some great products that are out there now with tokenized funds that have been created. We can go into, private equity funds and why. My book talks about why. We can go into that. And different debt functions. And it's great to see true programs coming about, right? I think it's difficult when there was a bunch of proof of concepts, because if you don't have the real program, you don't get the benefit of what blockchain technology can do. And really, you have no basis for the cost savings, right? The increased revenues, decreased costs. I feel like I'm talking a lot, but that's how I got into the space, and that kind of leads me right up to the book.
That is amazing. And I'll tell you, I have a similar journey, a similar story, because all the experiences, and I'll quote Steve Jobs, that at some point the dots will connect, and which means that all your work that you've done with early ICO days, lessons learned from that, structured finance, looking into where you are now. So tell us a little bit more about your book, From Hoodies to Suits. I love the title, because I remember, Annelise, going to early days meetups in New York, where attire was distinct between crypto bros and dudes and the lawyers who wore suits. And there were people in between, bankers especially, who were trying to fit in, who would take their jackets off and still have the semblance from a corporate culture. So true. Now the story is different, of course, with massive cross-pollination happening between traditional finance and crypto bros wanting to be like. So that distinction is slowly. And for me, I had to make a choice, and this is almost a decade ago, Annelise, that as a technologist who worked in corporate and banks, I chose the middle ground to just wear black all the time and fit in, or rather confuse both sides to let them figure out, are you a technologist or are you a corporate guy? But tell us more about your book and the motivation behind the title, because I think there's a lot to unpack, especially around the culture, and that leads to innovation of product, and the culture of, banking has a different mindset and technologists have a different mindset. How do you bring it together? Because this is really about technology products that have to coexist.
Sure. No, I remember our lawyer back in 2018 had He would change clothes if it was a tech company. He would change literally into a jean and hoodies out of his suits. And he showed us his closet. So he had extra suits and extra hoodies in there. So yes. So
Look, can I just step in there for one moment? And that is that when we're in Dubai, water sports, skiing and surf skis, etc. It was cold. It actually was cold in Dubai, and Nitin was quite on edge. He was in his normal sort of black shirt he's in now, but he was cold, and he's going, I can't understand this. And we're walking up and down the exhibition halls, going, where are the giveaways? Where are the hoodies? I need a hoodie. So he was hunting a hoodie because he was cold. Anyway.
That's funny. So I never really thought about, I have another fashion story, but we'll focus on this. So the book is called From Hoodies to Suits, Innovating Digital Assets for Traditional Finance. And so the thought process behind the title was really just recognizing and the hoodies represent technology, right? The hoodies are they've created this amazing technology that what I'm trying to remember what our AUM is now, $2.5 trillion, I think, or crypto. If you think about what they've created, I think there's $2.5 trillion of value outstanding with the global.
That's right, 2.65. Yeah.
So I think they've created something amazing, but what they're working on is kind of in the financial world on how to upgrade Wall Street or capital markets. I think you really need the suits, and the suits are a representation of regulation and structure and experience. And so I feel like everyone needs to work together to make this happen. And I'm a huge believer that, yes, this is already happening and it will continue to happen. But that's really, really the idea behind it. And I came up with this having worked with so many institutions or talking to old friends in traditional finance. Whenever they hear blockchain, they think crypto and they think it's a scam. And part of my recognition and think about going to a risk committee in a bank, right? And I would think if they're that type of person, because my friends are not, they're all educated. This is just not their thing. And so I wanted my goal is for finance people to understand the real difference, right? For senior executives and for finance people to recognize that blockchain is not Bitcoin. So, that's one of the first things I actually go into in the book. We're talking about Jamie Dimon's dialogue, the CEO of JP Morgan, about how Bitcoin's a pet rock, but wait a second. Blockchain is this amazing technology that more or less powers our bank. I mean, at the time, that wasn't the case, but JP Morgan coin is supposed to transact $1 billion a day now. So that's built on blockchain technology. And so I feel people understanding that and then kind of diving into what crypto built, how crypto is a proof of concept for traditional finance. So it's really a big, there's loads of different, every chapter is a story in itself. And I did write the book, so it is not a textbook. There were no other books out there. The books out there there weren't any mainstream books talking about capital markets and blockchain. And this is ideally written in stories, such that one person, so Bob can tell John. And if Bob can tell John, he understands it enough that there's a general understanding and I guess consensus of this. So I'm on the board of William & Mary, and the head of the finance department there read the book and loved it because it was all these questions that she had. But now it makes so much more sense. And so that's really the goal. You don't have to be a finance professor. It's really kind of for any of us working folk. But that was my target. I've also found a big crowd in the millennial and Gen Z because there's a whole section on how the generations are changing and how that they're really affecting finance and they're going to drive this innovation. They were born with a supercomputer in their hand. They're used to the digital world, and they are also inheriting majority of the wealth in the United States.
Yeah.
From the baby boomers. It's going to millennials and Gen Z. And they're a very different breed than kind of old school is used to. Gen Z, 85% in a UK study, 85% of Gen Z get their financial information from finfluencers, which is social media.
Wow.
Which is just so
Scary.
different. Right?
Scary, amazing and scary at the same time. So, the book's premise and what it's introducing is fascinating because we love to be able to sometimes make comments for reaction, which is in regards to, we make statements like disintermediation of the banking industry. But at the same time, we realize that there's both evolution and revolution that will occur in the realm of decentralized finance and how that's going to be. And then there's, of course, the interplay between governmental tax, boundaries, laws, regulations, etc., that tend to keep siloed investment or siloed banking environments in place. All of this is set to either stay rigid or be disrupted on the way through. But what's clear is that when technologies come through that are so multifaceted, very often we see evolution occurring from existing systems. And so we're seeing it right now, of course, with the likes of Jenny Jones at Franklin Templeton, who is a great advocate for this space. She's on the talk circuit. They're intending to create a US dollar stablecoin that generates interest and actually not traded in America, which is interesting. And they're also doing other really traditional finance products such as bonds, etc., that they intend to do this. So do you see this evolution starting as just that in the banks before it becomes more of a revolution?
Very eloquent with your revolution and evolution, I think. So I think you do need innovators. It's tough to call a bank an innovator along the way, but I feel that Franklin Templeton has been very forward thinking. But also look at this. So right now the global wealth or the world's wealth, 51% is in the hands of retail and 49% is in the hands of corporations. The large asset managers are going out and would like to increase their assets under management. Most of them go to the same small pool of endowments, of sovereigns, of this general set pool of people they go to, but they're not increasing their allocations by 20%. If you then turn and look at the world of alternatives, and let's say we're talking about alternatives, there's half as many public companies as there were in the late 90s. So the world of publics and private investments is changing. So if you look at, when I studied finance, we were told 60-40 stocks and bonds as a balanced portfolio, right? They're both traditional. If you look at the ultra high net worth, a study that BlackRock did for ultra high net worth, they're investing 60% in traditional and 40% in alternatives.
That's right.
So what's happening now is that the world of alternatives, if Franklin Templeton and other asset managers want to increase their buckets and increase their assets under management, that 51% of wealth is a huge opportunity to hit. And to do that, this technology makes it actually able to happen in the sense of efficiency. And so, yes, I do think kind of there's an evolution to a revolution, but I really think that I think there's a business sense and a business case behind why people are doing it. I think we will increase revenues and decrease expenses, yes. But I also think you've got to go where the business is. And I think the business is changing because so much of that Gen Z and millennials want a different type of investment. I just always go back, look at GameStop. GameStop is not the first time that social media is going to influence the price of a stock. And it was also kind of a calling out, I feel like, of voices wanting to be heard and going towards something. The world is shifting is where I'm trying to go. So I think, yes, I think there's that banks and asset managers both will expand their business to adapt because I think they will have to stay relevant. I think the benefits of stablecoin are outstanding. Any sort of digital, if I can hold money and earn interest while I'm holding the money, which is more or less what we're talking about with Franklin Templeton, right? But also, if you think about that, if I'm holding the money, that money's not in the banking system. So the bank is not holding my cash. And then if the bank isn't holding my cash, they can't lend it to someone else. And that's the whole how they make money. So I'm holding it. I can lend it to someone else. But my mom is not going to want to lend it to someone. My mom's not going to want to deal with it herself, right? She probably wants it to be in a bank or the bank to work for her. So that's kind of like, will that be like an 80-20 rule? Anyway, lots to
be seen. Yeah, unpack there. Actually, I'm getting goosebumps just listening to Annelise because I spent lion's share of my career, as you would imagine, is having the same conversation as the role of bank. And early days, if you remember, the famous comment from from Bill Gates was that we need banking, but not necessarily banks. And the role of bank has been constantly evolving. And my perspective, as you rightly pointed out, is is that there's a place for both, in the sense that I don't see banks being disrupted, but there's a nature of the bank that will change. And as this 2.65 trillion asset class that exists today, and that's only going to grow, and as we tokenize the real world and fiat assets, I begin to see a convergence where suddenly I can be able to trade one asset class for the other asset class. And that's why I think even in this podcast, we've looked into crypto as a fifth asset class, which is away from the traditional four. Of course, alt is a big bucket now because we seem to pack everything into alts, from real estate to anything that's alternative, including hedge funds and so on and so forth. But one thing which I think your book was brilliant in talking about, which I'd like to go back to your book again, only because we could talk ad nauseum about use cases and what the possibilities are, because fractional reserve is an important part of our credit creation engine and so on and so forth. But tell us more about how, the culture, which is reflective in your writing, and main points, sort of impact, vision, the thought, above all, the execution of, again, what suits are meant to do and what Hoodies are supposed to accentuate that with their technological input into that thinking and the thought process. And as I think, it is less about what you wear, but about our attire, which is the main title of your book. But it's more about what's reflective of our thought process and perspectives that we project in what we wear. So technologists will, anything is possible. I talk to developers all day long. I speak to cryptologists, everything is possible. And when you speak to risk people, as we both have, and if you speak to the business owners, they have constraints because there's regulation, there's whole element of things that can happen. What is the cultural balance? How do you achieve the cultural balance that can keep both of these active and still innovate? Which has been my challenge, I think.
I think it's tough. I think I think you need a lot of open-minded people. And I know I have worked with a number of hoodies that don't want to work with suits, right? Because it's outside of their comfort zone, which is similarly why I think suits don't want to work with hoodies as much, because if it's outside their comfort zone, because they don't understand the technology. Obviously, you mentioned regulation, which there's less clear regulation in a number of these things. I also feel that, there is occasionally regulation by enforcement, which is horrible, because I don't think there's people setting out there. I just was reading something about wallet providers today. So I feel like people are not setting out there to break rules. They're setting out there to create innovation, and there's hiccups, that they're running into regulatory issues. Obviously, I think the regulators want to learn. So I think that there's a lot of time spent working with the regulators. I hope they like my book, in the sense that we're talking about regulation, but I also feel that they just, the education factor, I think, is super helpful, recognizing where we want to go and figuring out it's hard to regulate innovation.
Yes.
But I think for companies themselves which is kind of where I think you're going, right? How do you work together with the risk group, with the hoodies and the suits? I think you need to find those open-minded people that are good, that are easy. They're almost okay to be uncomfortable, right? Inevitably, You're going to be uncomfortable because you're going to be outside of your comfort zone a bit. So I've joined Cadena as Chief Business Officer, which is very exciting.
Congratulations.
Thank you. It's a proof of work. I'm super excited about what it can do. It's a tech company. I've run finance companies, but not tech companies before. So I feel like I'm really excited about where we can go, but I'm outside of my comfort zone a little bit. But so are they, because they haven't, they're technologists. So I feel like everyone needs to find that diverse group of people, because I'm a huge believer in diversity of mindset. Correct. In any company. Because if everyone's the same, they think the same. And if they think the same, they generally have the same answers. But if you have people that have very diverse backgrounds that can come together and share those to help build something better, I think that's how we win.
So first day of work at Cadena, are you going to wear a hoodie or are you going to wear a suit? That's a question.
I am I think feedback is a gift. And I was on stage once at this institutional investment event. And it was raining, and I dressed like Moody's, so I was dressed very corporate. And I was speaking to all these institutional investors, which were, I don't know, there may be 150 in the room, and they were generally had a lot of years of experience, we'll just say. And afterwards, someone from the bank came up and said to me, a woman, you should be wearing stilettos and leather pants on stage. And I am so thankful because the idea of you're innovative, right? You're coming across, you're not the traditional finance, but you're innovative as well. So kind of more or less get your brand. So it was funny that she's recommending my brand not be necessarily hoodies or suits, but something that just sticks out a little bit. And so that's kind of funny. So
Oh, that's funny.
isn't it? It goes to the fashion. This is why I was mentioning the fashion before. I will always remember that, and I'm thankful. So I don't dress too. I try not to dress like I'm too corporate on stage. So yeah, I guess I'm a mix. I wear blouses a lot now.
Yeah.
You know?
Well, if I were to dish out unsolicited advice, black always works, and which
I wear black all winter, and then I wear blue and white in the summer.
that's fantastic. So one more, can you cite an example again, going back to your book, example of the culture gaps and how do, well, at the risk of not bringing in diversity, but inclusion of the instructive sort of process to harness creative energy? Only because, at least in my line of work, which I've tried to balance that working with risk, and I have made it my mission in the last, I would say, 8+ years in working with largely trying to explain the risk and compliance in any financial institution, whether it's capital markets or whether it's traditional bank. What are we trying to do with this? Which means you cannot apply, which is also a challenge of existing regulatory sort of college of regulators that exist around the world, is they're applying the same rules with the lens to this new technology and new asset class. And so any examples or any advice you can give to address that culture gap, which I think is such a critical component, Annelise, which I think your book talks about, because we all have talked about tech can do this, and you've got to change your mindset, and take example of Franklin Templeton, driven from top to bottom. But there's this middle pack in any enterprise, which is the cultural gap that you talk about. Any suggestions and thoughts
I'm
for
trying to
our
think
listeners?
specifically of what mentioned the cultural black. I will tell you, I do talk about change, which is one thing. Monkeys have an easier time with change than humans do. Humans have a very difficult time with change. I will share. There's different things. Sorry, can you steer me a little bit? Is there a specific answer that I can help you with for that one?
No, I just wanted to see what is if there is a recipe that you can cite to say, hey, these are cultural gaps. And of course, the obvious thing is educate yourself, work together, all that is obvious stuff. But is there anything that you can stand out and say, hey, if you simply do this one thing that takes away, like I've always said, that remove the risk and lawyers from the conversation and just business and tech work together, build a viable product. I don't think it's always worked for me, Annelise, because at the end of the day, I still have to go to risk. So I just was looking for that silver bullet and say, hey, if you do these two things, you don't have to worry about anything else.
Well, I mean, we would sit at a whiteboard. We would have a lawyer there as well, but we would have kind of someone from every department working to create these structures to make sure that they made sense. And there was no one to ask because no one had done it before, right? So, you can ask security lawyers after, but so that was really interesting. I think it's difficult. I think difficult to say there's one set way to do things, but the world is also, I think there's a lot of questions this brings up. So if you look at one of my things is with regulation or not, what's a security? Loans, I think, are amazing. When do loans become securities? This technology, I think which leads to additional regulation, which could lead to, tripping onto something. Legos right now Legos are one of our top performing asset classes. Who would have known that?
Yeah.
The Kentucky Derby, the horse that won the Kentucky Derby this past year,
Security.
was a security. He was securitized. It was a whole bunch of, it was not tokenized, not yet, but it was a bunch of investors that had come together to invest in that. And so where I'm going with that is, I think you have to think about kind of, yes, there's this structure, but where are we going, right? And and that's where I think the different minds really help, because it's also trying to figure out where are we going in 5 years and how does this build towards that, which is what the regulators are trying to think as well. But I don't have, it's hard because there is such a shift between hoodies and suits. But I do think communication is very important. I think everybody needs to know what their focus is, which leads to leadership. I think there needs to be strong leadership to make sure everybody's understanding what the message and the mission are, and to drive them forward.
Spot on.
Well, I've got to say,
Brilliant.
It's an extraordinary challenge to see two very different sections of business come together. I love technology. I love what this multi-stack world of blockchain, cryptocurrencies, decentralized finance, Web 3.0, artificial intelligence, Internet of Things devices all working together. And when I look at that, I think to myself, traditional finance is going to be disrupted. And they need to learn about how to adapt, how to be involved with that. So that's my passion. I'll stand in front of a group of people, often fairly senior investors, etc. And I've had the occasion where one or two of them will come up to me at the end of it and they're virtually shaking with anger. And they're shaking with anger because they've spent 40 years of their life generating income out of the existing system. And there's a suggestion that this area that they've spent building income from and frankly contributing to and creating is going to be disrupted and over a period of time look totally different, and they don't like it. So that cultural gap is going to be quite something. But my view in life is that you need to pivot. And those that do very well pivot. So I'm going to pivot right now, and I've got myself a hoodie.
I love it.
And I'm going to outline that I'm with the Hoodies in this particular space.
I love it.
And think that there's going to be extraordinary innovation coming, and disruption is very important. That doesn't take away from the fact that the existing infrastructure in many cases is not broken, and that there's opportunity to adapt in it. I've thoroughly enjoyed.
Where was that hoodie in Dubai?
Yes, that's right. Where was this hoodie in Dubai? Frankly, we went to Dubai. It was a desert city. What did I need a hoodie for?
Annelise, it was really interesting because usually all these crypto conferences have a lot of swag and a lot of hoodies and everything else. And it was cold because it was pouring and so we just want a hoodie. And as Deryck mentioned, what kind of crypto event is this? The Web3 event. There's not a single hoodie. They have a bunch of t-shirts, but no hoodies. So
that's funny.
Well, I think the simple outcome of that is that the giveaways of hoodies realised they are going to be in a desert city, and that didn't work for them. But look, what you've created here from hoodies to suits is extraordinary. And for the listeners, they can find out all about this on the website, which is just that, hoodies2suits.com. And it gives you a great breakdown of what the book is about, and also gives you an opportunity to order the book. I am so looking forward to reading it, Annelise, because it's the intersection that Nitin and I, most investors, exist in. The difference between traditional finance and the future of decentralized finance. Thank you so much for coming on.
Thank you.
That was lovely. Thank you for your time, Annelise. I owe you for this. So
I've enjoyed it.
Chat soon in consensus.
Absolutely.
Take care now. Bye.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin, Gaur, or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.